Yeah. Hey, I apologize for the delay today. I sent out invitations to the webinar as usual, and there was no link or button for you to join. And I don't know why. So it's kind of trying to figure that out. Seems to me you should have a link to the webinar. But so anyways, I apologize for that. Yeah, a little bit distracted, but I guess we should get fired up and get ready to go. You guys ready to do some currency trading? Looks like it's the 3rd of November. What day of the week is it? Yeah, I'm that distracted. Yeah, it's a Tuesday, huh? Yeah, well, let me gather my thoughts while we get this party started, huh? Let's go. Is anyone attending today's webinar for the first, well, boy, I can't get anything straight. Hey, welcome to Forex.Today. Is anyone attending, is there any first timers today? I was going to say, is there anyone, whatever. Boy, I'm just off today, huh? Well, it'd be the first time today for everybody, wouldn't it? Yeah, I don't know. I think I've fallen off my bicycle or something. So, hey, let me just get going. One thing I can do is trade, so let's do that. Hey, trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that offers investors and traders like yourself access to the interbanking system so you can trade Forex. But also you have access to energies, metals, and indices and binary options. Hey, we do these sessions every single day, 7:30 in the morning. It says here to 8:15. I almost always go to 8:45. So I throw in an extra half an hour almost always. Sometimes I go 2 hours, depending. I think that's a little too long. So, oh, and by the way, Fridays I'm over at FX Street, and this Friday obviously is non-farm payrolls. Number 114. That's pretty cool. Neat, huh? So today's webinar is hosted at Forex.Today. If you swing on by, you can attend these webinars live. There are archives of previous webinars on the right-hand side. And by the way, there's at least 12 trading ideas every single day posted at Forex.Today for your reading and trading pleasure. All right, so yesterday we talked about specializing in something. Did anyone put some thought toward that? What would you like to specialize in? Yeah? Yeah, cool. Euro yen specifically? Really? So Ishmael, the issue I have with that is I'm bearish on both. So I wouldn't want to specialize on that at all. Yeah, and what I'm actually asking is not a pair to focus on, okay, but a specific currency, because some days, like, look, there are going to be days euro yen goes straight up or straight down, and you'll be happy. Even if I disagree with it, it doesn't really matter, right? If that's what you want to specialize in, that's fine. The only problem is some days, or perhaps many days, it won't do anything that you want it to do. So what I'd rather you do when I say specialize, I want you to think about the technical and fundamental data going into one particular currency, not a currency pair, because what I want you to do is if you're, let's say, bearish on the euro because of quantitative easing. I can't disagree with that. So what your job is to do, you already know you're going to be short euro. You just don't know if you're going to make a trade today, but you're net short by your bias euro. So what you should be looking for today is something strong. That's why I don't want you to get, stuck on one currency pair. I want you to get stuck on one currency and say, all right, if I'm bearish on euro, I'm going to be bearish today, I'm going to be bearish tomorrow, I'm going to be bearish next week, I'm going to be bearish next month, because my long-term technical and fundamental bias, whatever it is. Okay, so I'm either going to sell it today or I'm not going to sell it today. I'm either going to sell it tomorrow or I'm not going to sell it tomorrow. The question is, what are you a buyer of today? And that comes down to relative strength. So maybe some days euro yen does fall and you're happy, but many other days I think you'll be better off selling euro dollar. Maybe some days euro pound, maybe euro Aussie, maybe that would be a bad thing on most days, but maybe some days the Aussie would be the one. Right? I want you to be flexible on that side because you're always looking to buy something. Oh, let me get rid of this nonsense. Right? You see what I mean? And if nothing is weak, if nothing's strong today, or the only thing strong today is your euro and you're a bear on euro, then don't do anything. All right. So anyways. So you could do something like this. Let's say you want to be a bear on euro. All you do all day, every day, since that's your specialty, you're a bear on euro, you simply look for opportunities to sell euro. And you have a setup maybe like this, and I would start here. Should I sell euro pound here? Oops. Okay. Should I sell euro CAD here? Should I sell euro Kiwi here? Should I sell euro Aussie here? And of course, I could also have euro dollar and euro anything, right? And I'm asking the same question over and over and over. Should I sell euro based on this setup? Well, euro Kiwi doesn't look that great of a setup. I mean, I guess you could argue it if you thought that was resistance. Okay. So if I was looking at euro Aussie, thinking about maybe selling it, my trade plan would probably be something like this. Okay. What's my specialty? I know everything about euro, and I'm a bear. Liquidity, Eds, you don't have to worry about liquidity. You don't need to, you don't need to worry. Unless you're trading $100 million, I don't think you're going to need to worry about liquidity. This isn't a penny stock. Okay? Yeah, you're not going to need to worry about that. So that would be how you specialize. And you'll notice I have my chart set up this way. Scan Great British Pound. What if I'm a bull on Great British Pound? Then my question is, do I buy pound dollar today? Do I buy pound yen today? Do I buy pound Aussie today? Do I buy pound Swissy today? And when you're only asking one question, trading tends to get a lot easier. Because the answer is yes or no. Or am I going to buy pound Aussie today? Well, maybe. I'm at a 50%. I'm kind of at a role reversal. If I follow this line across, that seems pretty interesting. Maybe I need to add an oscillator to this. Let me change the template to a standard template. Okay, yeah, maybe I do buy this today. Okay, this used to be support before. Why not now? Okay, yeah, maybe I do. And I think trading is going to be a lot easier. Okay, if you don't like this price action, then wait. You say, well, I want to buy it here. I see its support, but I'd like to see, you know, at least on the 15-minute chart, a 21.55 cross, and then I'll grab the next dip. Cool, man. Cool beans. Maybe you like it on the 4-hour, and you're like, well, but we're still riding the 5 down, but I can see we're getting close. So maybe sometime soon. Cool beans, man. But you're not running around in circles looking for something to trade, because by the time you find it, you've already missed it. Right, guys? Where you're going to make your money is your research for the Great British Pound. And if your research tells you between now in the next, how about this, in the next 6 months or in the next 12 months, you believe the Great British Pound is going to increase in value through your research. Remember, I told you, it'll only take 2 hours a day for 2 years. And you'll probably know everything there is to know about the Great British Pound. Well, cool, man. It's like going to school and getting an MBA. That's it? Yeah, it's some work. You have to work at it every single day for a couple of years. But then you're an expert. Cool. And the rest would just be, all right, you think these pairs are going up? Good. Wait for uptrends, buy dips. Okay. Look, scan yen. So for example, what did I do here? Ishmael, I use MT4. This is MetaTrader. Yeah. Oh, my pleasure. What did I do here, guys? Let me get this out of the way so it's not so complicated. This is the triple bottom, higher high, higher low trade that we talked about, I don't know, last week, I guess. Okay, I'm long. I bought it right there. It's hard to see because my stop is already at break even. Nice, huh? There's my target. I don't care about that. Doesn't matter to me. And there it is. Do I have a bias? Yeah. I'm hoping this goes up. Is it an Aussie play? No, not necessarily. It's more of a yen play. you can see I have analysis, excuse me, I have analysis going on for this currency pair. I'm looking at support and resistance. Wouldn't it be cool if I got a high above this resistance? What am I going to do next? I'll buy the dip if I can. But I'm filtering, excuse me, I'm filtering all of this through the lens of a bias. Okay. So what I don't want to see, if I review your trading, I don't want to see like, I don't want to see you long some of these and short some of these at the same time. And very often I see that. And I'm like, well, what are you doing? Are you buying yen or are you selling yen? Oh, I never thought about that. Okay. What are you doing like dollar pairs? Should you be long pound dollar and short euro dollar? No, probably not. Right? So you start with your bias and you filter from there. What's my fundamental bias for this euro dollar? Okay. So should I have a trade long on this? If I'm a bear? No, not if I have a bias, right? Otherwise, I'm just chasing price action around. So, okay. And it looks like I'm short. Okay. So if I'm short this, what about pound dollar? Well, it'd be much better to be short pound dollar as well. If I wanted to buy the pound, I shouldn't do it against the dollar if my bias for the dollar is positive. You know what I mean? So you should look at the pound and the dollar separately. So I have this coming down, but you remember I have some, even though the technicals are there, I have some fundamental doubts about this going farther as the technicals have suggested. But this is what we've been looking at for the year. Sold it off here. Here's like the head and shoulders type thing. Here was the retrace. Okay. Now we're zooming in. We're way in here. But I'm hoping this is significant. Okay. I'm hoping that's significant. But would I buy pound dollar? Not if my dollar bias is bullish. But I look at this and I'm thinking pound yen because my yen bias is bearish. Okay? And that's why I'm using relative strength to find my proper trades. If I want to be long Aussie dollar, or if I want to be long Aussie, I'm better off being long Aussie yen if that's my bias. What time? Okay. And I might look at this Aussie dollar, and like as you can see, I have the double bottom higher high set up for you. It came down, made the 618, which we have planned out, and has now potentially started an upward move here, but I wouldn't trade this. What would I trade? Aussie yen. So how many days ago was there a setup on this Aussie dollar for an Aussie long? How many days ago did this occur? So now go to Aussie yen. Okay. Okay. You can see I've been long Aussie yen since that Aussie dollar trade set up. Right? I think this is where James is like, well, you know, why don't we do that trade and then follow it? Okay. So I did. It's up 76 pips. Okay, so that's how I'm working these things. If I like it on the Aussie dollar, I'm going to trade it on the Aussie yen because I'm lining things up with my fundamental bias. Or look, if you just don't know fundamentals and you haven't taken the fundamental course or anything like that, you just want to trade it technically, I'm cool with that. Some people just don't like fundamentals or don't get it or don't want to, fine. Right? If you think purely mechanical, that's fine. But look at a long-term chart and have a bias of some sort. Okay. Daily chart. What's your best guess that's going to happen on the daily chart? Yeah, good cycle up, right? So if this cycles up, my Aussie yen will probably do just fine, right? Well, if it's going to cycle up, James, it's going to cycle up. Okay, so anyways, where's my mouse? Lost my mouse. Well, we knew the Asian sessions were big this week, right? Oops. So why was the Asian session big yesterday? The RBA had a meeting, an interest rate decision. Yeah. Yeah, they didn't cut interest rates. Yep. Good thing I was long with my stop at break even. But we talk about that though, don't we? We talked about it last week. That if they don't cut interest rates, then that's going to be positive for the Aussie because we're already thinking about 70 on the Aussie dollar being the floor. So if I can get my stop at break even before that meeting, not cutting further is not bearish, which for some is bullish. So that's all. Eric says, perhaps it's even a bit hawkish. Cool, man. All I know is going into the meeting, I was long with my stop at break even. So if they came out and cut interest rates, what would happen to my position? I get knocked out. Yeah, but I was long for 3 or 4 days, so I earned about $10 in interest. Think about it. What's the probability that over the course of 6 months you can get 10 Aussie yen trades long and open? All you do is move your stop to break even and never touch it again. You have 6 months. You're going to try every single day. Let's say you have $10,000 in your trading account and you're trading mini lots. Okay? So over the course of 6 months, right, you're earning $2.50 a day times how many days? 365 if you can keep it open, right? $2.50 times 365. You'll earn $912 in interest. How much money do you have invested in the market if you have 10 mini lots? That's just interest, guys. So, right? That's just interest. What's the chance that you're in those trades that long and you make 100 pips per trade? I mean, you're virtually guaranteed, right? You could certainly imagine 500 pips per trade times 10 trades, 5,000 pips. I mean, you could, I think, easily. So when you start looking at things from a longer point of view, a longer term point of view, right? It's pretty good. They're pretty good returns. So have a bias and maybe trade in that direction and slowly build positions. So these are the stock markets around the world. Do you guys like to trade stock indices? Okay. So this is the DAX, and this is the 382 we talked about. How lovely, huh? Isn't it nice to know that it trades exactly the same as a currency? Double bottom at 382. It's a nice little move. All right. So, anyways, let's get going. Let's start with Euro USD. Okay. So you can see what I got going on here. Right. Just selling a retracement. Has this made a higher high? Shoot, come on. There we go. No. So I'm trading in that direction. If it makes a higher high, I take a break for a while. Move into a smaller time frame. Okay. So if I'm a bear, okay, I'm a bear. I wake up in the morning, I know I'm a bear. In fact, at nighttime when I'm dreaming of selling euro dollar. Then I wake up and I go to my computer and I know London is opening. I see euro dollars overbought. I know it's prime time day for trading. Is it plausible I'm ready to sell euro dollar? Like I have intent. I'm booting up my computer around the London Open and I'm thinking, I wonder if I can sell euro dollar today. Is it plausible I can go through life like this? Where I've done my analysis, technically and fundamentally, whatever, on euro dollar? Yeah. In fact, that's what I'm trying to get you to do, right? Based on your research. One of the things I talk about is knowing what you're going to do in the future before it happens, right? Like tomorrow, you're either going to sell euro dollar or you're not going to sell euro dollar. Right? And if the market's bullish, let's say we're making a series of higher highs and higher lows. Do I wake up in the morning and sell euro dollar at the London Open because I'm bearish? No. We have bullish price action. But when the bullish price action stops, I start to develop a bias like this. As you can see, I already have it drawn out for you. And we did do it several days ago. So now, if the market's no longer doing price action up, then I need to prepare to sell, correct? So this London Open, could I sell it? Yeah. Came all the way back. Oh well. But now we have a double top. Maybe you sell it in New York. Maybe. Right? One of the ways that I like to use my oscillators is to, first of all, wait for price action to agree with my fundamental bias. So as long as price action on the candlesticks isn't bullish. See, if I'm a bear and we're making a series of higher highs and higher lows, I'm just simply not in the market. Okay? But if we start doing things like double tops and some drops and maybe even a lower low, lower high scenario, well, then that's good, right? Because that would be congruent to my fundamental bias. So one of the things I like to look for at that point using oscillators is overbought conditions like this. Okay? In particular, around market opens. London open, like here, or New York open here. That's what these oscillators are there for. And that gives you permission to be ready to trade. Now, do you have to wait for the oscillator to move in and all that kind of stuff? That's a personal decision. Okay? But you could be ready on a 5-minute chart and say, wow, we're overbought on the 15, so I'm going to look for an opportunity to sell on a 5. And I'm sure you can find a way. But I think trading is a lot easier if you've decided what your fundamental or long-term technical bias is, and then you just simply wait and ask yourself, do I sell the euro dollar at the London Open today? And there's no other question. Okay. Do I sell this euro dollar at the New York Open? No, unless I can kick it off of a moving average, right? Okay. Okay. Remember, when price is below the 21, you're bearish and aggressive. Okay? That's it. Okay, what do I mean by aggressive? There's nothing you can do that would make me buy this. There's no argument you could possibly give me to buy this. Okay? There's just no way I can buy this. Another thing that you can translate it to is like, I'm short this, I'm up 35 pips. Should I take profit? No. I'm just going to let this move. I'm going to let it run. Oh, but we're at the daily S2. That is a great place to take profit. Okay. But I'm going to try to let this run. But I will move my stop at break even. Because that is support. Cool. And that's how I would play that if I were me. Okay. And would you consider this move that we've had today, would you consider that a new low? So then what about tomorrow? Should I sell euro dollar tomorrow if I get the proper chance? Yeah, so let's say today we come down to the weekly pivot, and then we come up here. Okay, I'm going to sell it there. You know, it's Tuesday, you know, Wednesday maybe, Wednesday afternoon maybe. Okay, because what I'm doing here is at some point we need to do a retracement on this level. Okay, you can see it's a 382, right? You see it, as well as central pivot and all that kind of stuff. And so the trick is you have to see multiple time frames too, right? So if you're trading like I guess daily chart's probably too much, but I was going to say higher time frames are going to need their little retracements as well. Oh, and if it rises up here, I'll sell that too. Okay. Yep. Yeah, and there will be retracements on the higher fractal. Everybody needs their retracement, whether you're trading a 15-minute chart or a daily chart. Okay. Okay. Let's look at USD CAD because we know we got a lot of CAD news this week. By the way, the Forex.Today email just went out. Is everybody on the email list to get their trading ideas? It's 8 trading ideas just went out to the Forex.Today list. That's what it looks like. Cool, man. Everybody signed up for that? You can sign up right on the homepage, Forex.Today. All right, so here we are, USD CAD, daily chart. Gray areas roll reversal. Canadian dollar was strong for 3 days in a row, fell into support. Okay, just lining all these things up. Fell about, I guess we can call that a 50%. Well, this isn't actually marked properly, so we'll do it that way. Fell exactly 50%. You see that? Into this gray zone, which is just simply what I've had. You can see I probably didn't mark it quite right. I was doing broad strokes on the daily chart. You can see what I'm supposed to have done is take these tops, okay, and bring it across. And you can see we hit those. I probably drew this on a daily chart, and it's less accurate. But so, anyways, came down 50 into a roll reversal. What kind of pattern do we, right? Down into here, higher high, higher low, higher high, higher low, right? Comes down, kicks off the roll reversal. Nice little oscillator. At some point, you could be bearish on the Canadian dollar again. What do you think, guys? Let's go back in here, take a look at oil. So if the Canadian dollar weakness translates to oil, we could get oil weakness today, right? Yeah, so what we were saying is if this is going up, you want to be long CAD yen. If this is going down, you want to be long USD CAD. Wow, look at that Baltic Dry Index, 680. Wow, that's just crazy. So we'll see how it behaves in this range. Yeah, crazy low. Yeah, Baltic Dry Index. When you trade commodities, that was something that I love to watch every day. That's just crazy low. Like I think at some point last year, it went back up to like 2,000. 680 is low, man. That should be bad for commodities. Hang on, I'm just thinking. Well, let's wrap up with USD yen. What do you want to do with USD yen? What's your bias? So what is it that you look for? If you are at support, okay, you have to be at support. And if you're at support and you're oversold, you can buy it. Not because it's oversold. You never do anything that's oversold. If you're at support and it's oversold, you could buy. That's how you range trade, by the way, guys. So if you're trending, you know, you get higher highs and higher lows and higher highs and higher lows. But if you're range trading, you're moving sideways. If you're at support and it's oversold, you could buy it. That's that. If you're range trading, you want to identify the top of the range. And if all things good in the world turn great, you get a bigger move. And you break out of the range, and that maybe is a new trend. And you could say, you can see we've played this game before, buying it low and then hoping it breaks out, and it just doesn't do it, and doesn't do it, and doesn't do it. Okay. But my game with the USD yen, I don't know, for at least a year, I think, is buy it at psych levels. If we get like to 19, I look for a proper trade entry. I don't buy it because of 19, but if I get a proper entry near 19, I take it. If I can get one at 18 or 17 or 16 or 15 or 14 or 13, right? 115, 114, 113. And that's just a game that's been going on for a very long time. And, you know, and here it is. This is basically retracements to 20. 120,000. So I think someone asked about the S&P 500. Yeah, we can do that if you want. We can wrap up with that. Okay. How did I do? Okay, we've already done the analysis. There's my prediction. Okay. So it's moving along really nice, and you can see, like a currency, right? Higher high, higher low, higher high, higher low, higher low. It's riding the moving averages. It's moving up just nicely. in the direction of my fundamental bias. It's pretty top-ish, right? Maybe we take a break going into non-farm payrolls. See, the thing is, the way that I look at the stock market is that the vast majority of people make money when it's moving up. And it's going to move up, generally speaking, unless we have a crisis, basically, for lack of a better word, that the system's just not working at the moment, whatever that is. Suddenly people want to go to cash, whatever. That's a pretty unusual world. And it does happen, but it doesn't happen frequently. For example, you'd have to get mutual funds to sell positions. Well, mutual funds don't want to sell positions. They want to cash your $50 check every month. So there's a headwind. This thing is going to move north. Yeah, there's going to be times of retracement. That's fine. And that usually has to do with things like rebalancing. You take profit on some of your winners, you get out of some of your dogs with fleas, but generally speaking, you put that money back to work because you're a money manager, you're a mutual fund manager, you're an ETF manager, you're a wealth manager. You're taking other people's money and you're putting it in the market and you collect some sort of commission or management fee. As long as your clients stay in the market, you're going to earn 1%. They get out of the market, you earn nothing. So what are you going to do? Keep them in the market. So when I see retracements, I look at this technically. If this went lower than this, that would be extremely bearish if we had to move down to here. Agreed? That would be very bad for a lot of people. And right or wrong, the way I interpret things is that people don't want that to happen. Okay? Not many people win, lots of people lose. And these drops are opportunities to buy the dip. And it's one of these things where you can buy it, you jam it, and it should go up. If it goes lower, it's going to go a lot lower, and you don't want to be on that. Okay? But again, the way I filter through this is I look at it and I think nobody wants that to happen. The S&P 500 has to go up. Well, it's a headwind because, Linda, people make money on their way up, they lose money on the way down. Short selling stock is not an average trade for an average trader. Mutual funds are not selling short. Wealth managers are not selling short. Yeah, maybe a hedge fund manager, but you know what I mean? But most people don't have hedge funds. Most people have money taken out of their paycheck and put it into a mutual fund. Okay? So that's what I mean by a headwind, where most people's money will enter the market and they will be long. So this has a propensity to go up versus down. Okay? So the stock market for me is I look at it and I think the farther it falls, the more that people want to buy it. Okay? Remember, even when the world was ending, when capitalism as we knew it was ending, the stock market fell exactly 50% and then people bought it. Why? Because they could buy it for 50%. Did you know the Spanish stock market dropped 78.6%? Okay. I told people at an FX Street webinar, I showed it to them. I said this, and FX Street is located in Spain. So I pulled up the Spanish stock market, and this was right in the the peak of the crisis, the peak of the crash, so to speak. Um, and it was essentially 80% discounted, right? And I told everybody, I said, do you honestly believe every company in Spain is going to be worthless? It was possible at that time, but I'm like, do you honestly believe that that's where we are now in the state of the world, that every Spanish company will have a market cap of 0? That's where we're going to be 20 years from now. And everybody said, no. I mean, then I said, well, look, people are freaking out right now. And there are some giant, big concerns. But if you think the Spanish stock market's going to be around in 25 years, you could buy the Spanish stock market at 80% off and give it to your children. Give it to your grandchildren. Oh, I see what you guys are saying. Going back to the headwind, tailwind. Am I saying it backwards? I'm saying headwind, but that actually would be holding it down. Is that what it is? I'm just having a faux pas. An English faux pas. Yeah, that could happen. Well, if that's the case, I apologize for the confusion. So anyways, I think generally speaking, the stock market wants to go up, and the farther it falls, the more it wants to go up. And it's similar to what I've said in gold. The closer it gets to $1,000, the more likely people are going to buy it only because it's close to $1,000, and that they want it to stay above $1,000. So let's just say I think it's going to go up, Linda. Even when the stock market's falling, I think it wants to go up. That's all so think about who are the market participants in the stock market. And it's almost all institutional money, right? All institutional money. There are some hedge funds, but the vast majority are big institutional investors like mutual funds and ETFs and stuff. And generally speaking, these people make money. And I mean, the actual people make money if the stock market's going up. If you're a wealth manager, generally speaking, the years you make good money and you buy yourself a yacht as a wealth manager, those are the years that the stock market goes up. And you probably never call your clients. Every once in a while, you take them golfing at your country club. Or you go and you meet them at the charity horse jumping event to support some children in need cause, right? And you're like, yeah, I'll meet you at the horse jumping event, and I have a tent there. Come by, we'll have champagne. That's the good year. And on the bad year, when the stock market's crashing, you're calling your client saying, ride out the storm. We made long-term investments. Don't get out now. It's just market timing. If you do, please don't take your money out of the market, because I won't make any money if you pull your money out of the market. That's how the market works. So when the stock market's crashing, yeah, there are some hedge funds shorting and making money. But generally speaking, there are people getting on the phone, calling their clients, telling them not to panic. So at some point, it's probably going to go back up unless there's a mechanism in the marketplace to hold it down, like the Fed is doing something to hold the stock market down. But that's not the case. Okay? So, peace on earth. May the pips be with you. May your profits be above average. And I hope to see you here tomorrow. Yeah, it's 8:45 in the morning and I'm exhausted. I think I'll take a nap. What a weird life we live, huh? Well, thank you again for being on my team. I appreciate it. And I'll see you tomorrow. Cheers.